Alrighty, welcome back everyone from the Wall Street Silver community. We have a special guest with us. Today we have George Gammon. Gammon is an American real estate investor, entrepreneur, and a self-proclaimed macroeconomics addict. Is that correct, George?
That is spot on.
Awesome, awesome. We also have Jim Lewis and Lee Justo with us from the Wall Street Silver community. George, we have some questions. We're just going to get right into it. Lee, Jim, who would like to start?
I can kick this one off if that's okay. Now, your biggest thing is the Rebel Capitalist. You wanted to mention that. Can you tell us a little bit about how you got started with that and what your background is and how you got to where you are and so successful at being on a YouTube personality?
Sure. I retired. I was an entrepreneur for many years. I retired in 2012. And when I retired, I had a decent amount of savings, but not enough to where I could just draw it down and live the rest of my life with the same standard of living. So I needed to get about a 6 or 7% return. I'm not someone that likes to delegate my finances to someone else. I like to be in control of it. But I didn't know anything. I didn't know what a yield curve was. I didn't know what the Fed was. I didn't know what the bond market was, just absolutely zero. And I'd never owned a piece of real estate in my life, but I was in Singapore, and about 10 minutes before a dinner date, I stumbled across Milton Friedman's Free to Choose series on YouTube that he did, I believe, in 1980 or 81 on PBS. And it just really resonated because he was articulating all the things that I had had in my mind, not only as an entrepreneur and employer, but also as an employee, and kind of the life experiences that I had on both sides of the coin and the conclusions that I drew from those life experiences. He was putting into words and then putting into a video. So it really struck a chord, and I thought, wow, this guy is fantastic. And then I went from Milton Friedman to really studying Thomas Sowell, another individual that studied under Friedman, who's probably my favorite economist. And then I said, okay, well, how can I use this for investing? So that kind of took me down the path to discover guys like Jim Grant, like Jim Rogers, Mark Faber, Doug Casey, Rick Rule, Peter Schiff, Jim Rickards, and then some of the investing greats like Stan Druckenmiller. And I've read the Market Wizards books probably,
Yeah.
literally
Awesome
thousands
books.
of times. Yeah. On audio book and whatnot. So
Have you read Reminiscence, the stock operator yet?
I've got it on my audiobook. I've listened to bits and pieces of it,
Okay.
but I haven't listened to the whole thing from
Another
start to
classic.
finish.
Yep.
Yeah, exactly. And a lot of people, by the way, in Market Wizards reference that
Yes.
book. And they also reference blackjack, which is why I started playing blackjack way back in 2000, just to try to train my brain to think in terms of probabilities, which actually helped me quite a bit in business. But so I started trying, I came to the conclusion that the strategy that worked best with my personality is just an extreme contrarian and just buy things when they're super, super cheap, unloved. Nobody wants them. They're hated. I've always felt comfortable kind of being in that situation in my personal life. So it kind of worked well as an investing strategy. And at that time, real estate fell into that category. This was 2012. And in hindsight, that sounds like a genius play. But I can assure you, back then, when I told my family members that I wanted to invest in real estate, it was almost like a Alcoholics Anonymous intervention meeting, right? Where they schedule this, you come in, they say, George, we got to talk some sense into you. This is the craziest thing you've ever talked about, and you're going to lose all your money, and everyone knows that real estate is in a bust and it's going to keep going down, and no one in their right mind would buy rental properties right now. But again, for me, that's a position that I felt very comfortable in. And it was, in fact, I referenced the chart that I initially used in that video that you were talking about before we started recording on the housing market. So anyway, that's what got me involved with real estate. So as an entrepreneur, I made quite a bit of money overseas. When I figured out the real estate game in the Midwest, this was 2013, 14. It's kind of a natural progression for me to look for higher returns outside of the US. So I went down to South America because now I started to understand macro a little bit better. And I thought that we were going to have maybe some decent inflation, and that baby boomers or retirees that were on a fixed income, their purchasing power would be pinched, and therefore they'd look for alternatives to increase their standard of living when they're retired, just living on Social Security as an example, or some fixed amount of money from their pension. And so I looked in Ecuador, and then I ended up investing quite heavily in Colombia, in Medellin, Colombia in 2015. That was because of oil went down below 30. I didn't know anything about oil, but I figured out that the peso was loosely tied to oil. And if I bought peso denominated assets, then hopefully I could get kind of a double whammy. So at the time I did real estate. So I bought peso denominated real estate and just kind of parlayed that into a team that I now have that's probably 20, 25 people that does this consistently, even when I'm not there. So 2019, we're doing all these properties, buying these unloved, ugly apartments in Medellin is what most of them are, these condos. And you find a motivated seller, but we're doing so many of them that I'm like, well, why don't we just do a TV show? Because these things are very popular in the United States. So why wouldn't they be popular here? I knew nothing about TV, but as an entrepreneur, you just shoot first and ask questions later. So I went down to the local TV station and I pitched them on this idea of this gringo guy that really didn't speak Spanish at all, not only producing, but starring in a local TV show that was in Spanish with just subtitles.
They went for it? They loved it or what?
Well, initially they were like, yeah, okay, gringo, whatever. But they were nice enough to say, why don't you come back in 2 weeks with a demo reel, I think it's called, like basically 5 minutes, a little short of what you're envisioning. And if you can put that together, then maybe we'll talk. I got the TV show. We did 13 episodes.
Oh, that's
yeah,
awesome.
it was called Vida en Remodelación.
Wow.
Okay.
So the remodeling life. Basically,
Right, yeah.
It was me. I was the real estate investor. Then it followed around my architect and designer, who are a husband and wife team, young couple, very charismatic. It was a great show. But then after we got done with season 1, then I had all these fantastic editors because I had to produce the show myself. The TV station did not produce the show; they just aired it. So I figured that out really quick, but I had all these great people and I didn't want to lose them. I wanted to keep them employed. And I always thought, it'd be a good idea to start a YouTube channel. So that's why I started the channel initially. And it was just about real estate investing because I didn't think anyone would want to watch a video on macro, but that was my true passion. I love real estate investing. It's a good way to make money, but I'm really, if you get me at dinner, I'm always going to be talking about macro. Those are the podcasts that I listen to. So we threw in a couple macro videos, and those actually were the ones that were popular. The real estate videos actually didn't do too well. So I'm like, well, this is a good fit. This works. This is a win-win because this is what I actually want to talk about. And then we, in a roundabout way, started doing whiteboard videos, which became extremely popular. And then the channel, I think, got to 100,000 subscribers in about maybe 8 or 9 months, something like that. Wow. Now it's almost 300,000. And back about maybe a year ago, I started a podcast where I was doing interviews on the YouTube channel, but turning them into a podcast. And that's what you referenced earlier, called the Rebel Capitalist Show. And now in June, we're doing Rebel Capitalist Live, which is an investment conference, not over Zoom, not Skype, actually live human beings talking to each other face to face, believe it or not. And that's in Miami, June 11th through the 13th. So a lot of the people are coming out that I talked to on the show, guys like Kiyosaki and gals like Lynette Zhang, Jeff Snyder, Brent Johnson, you guys probably know them, Mark Moss and Jason Hart, Ken McElroy, a bunch of awesome people that are going to, I think, blow everyone away. But more importantly, you're able to network with a group of like-minded individuals. So we're looking forward to that.
Well, I'm based in Orlando, so I might actually come down for that just to see it live. That could be really interesting. So,
I was just looking at, I've just been actually looking at properties in Orlando because I went down to Puerto Rico to spend some time down there for ACT 2022. And it's just a complete, it's a police state there. It's like East Germany. There's martial law. And I want nothing to do with that. So I was there for about 24 hours and just hit the bid. I got the earliest flight out. So I came to Florida to try to find a little personal freedom and liberty, which I found a lot of in Naples. That's where I am right now. Naples is fantastic. I mean, very few restaurants or businesses here require that you wear a mask. They just make it optional, which is what I think the way it should be. Yeah. So it's really great here. But I was actually looking at Orlando for maybe after the event, getting an Airbnb, then maybe a 6-month rental there. So
I was saying here in Canada, they're doing it's brutal. You can't even go to a restaurant. They shut everything down. You have to eat outside with a mask on. It's brutal.
Yeah, what's interesting is here in Naples, I guess it's usually a pretty expensive area, but right now, I mean, my budget is pretty significant compared to most people's, to say the least. And I mean, it's very difficult to find an actual really nice property. And I was talking to my real estate agent about this, and she said, typically what happens in this area is people leave around March or April, then they'll rent out their property until November. And so usually this is the down season. It's very easy to get a spot, but today the prices are still sky high, if not higher, because you have so many people from across the United States, in the world, flooding into Florida just to get some personal freedom and liberty. And I figured that, but what I didn't think about is no one is leaving. So in fact, I just tried to rent a place yesterday that it says, on the MLS that it's open. Then you call the agent calls and said, oh, nope, sorry, it's not going to be rented this year because they're Canadian and they don't want to go back. Yeah, seriously.
That's great. I've lived here for years, and we've been a freedom zone since, our governor, Rick DeSantis, he basically said, put everything back to normal last September. He said, kids go back to school, business is open, everything's voluntary. He won't let the cities do any sort of retaliation. Even some of the cities that do want to be stricter, he's taken away through executive orders. He said, no, this is all going to be voluntary. We need to talk to our neighbors. We need to work with them. There's not going to be any fines. There's not going to be any of that going on in Florida. And it's been very, and I've traveled outside of Florida, and I'm like, why are people still putting up with all this?
Yeah,
and
exactly.
It's just shocked me. Hey, I want to share something on the screen, something you did on Twitter recently, if we could, George. This was does everyone see that?
Yeah.
So this is a question you posed recently on Twitter for your followers. Yeah, that I thought was really, it sort of made you think, it made me think and pause for a few minutes.
That's exactly why I did it. That's exactly why I did it. Most of the things I post on Twitter, it's hopefully to get people to think.
Yeah. So let's go through this, and I want to get your, you asked everyone else. I want you to maybe give us your thoughts on this. If you voluntarily wear a mask, when will you stop? And if your answer is when it's safe, how will you determine if it's safe? What have you gotten any great answers on this, or what's your own answer to this one?
No, I haven't had time to check it, but I'm leading people down the path, because if they take that to its logical conclusion, they're going to say, when the central planners tell me it's safe. Mm-hmm. And then you take that to the next step, and that's hopefully it'll dawn on people that they're delegating their critical thinking to central planners and politicians that have ulterior motives. And that's the point of that tweet, because ask any of your friends, that are wearing this. They say, well, you're going to, there's going to be some other strain, or there's going to be this, or there's going to be this. Well, how do you know that? You're not out there figuring this stuff out. What you're doing is you're just choosing what central planner to listen to. And then you're just assuming that they're correct because all of your friends or the media is telling you they're correct, without actually looking into the research and seeing that there's a lot of different opinions out there. And go on to John Hopkins' website, for heaven's sakes, and look at the statistics from state to state. And then you go in there and actually go to those states. A lot of people that push back on this idea, they've never been out of their state, such as California or New York or something like this. And they need to go to a state like Idaho, right? Because I'll say, look at the statistics, look at the graphs. as far as Idaho. How can they be identical to California when you have almost zero compliance in Idaho, and in California you have a lot more compliance due to government mandates, among other things? And they'll say, oh, well, Idaho, yeah, they don't have the law, but they're probably just wearing the masks anyway. And in California, although they have a law, there's probably fewer people. No, 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 no. Go there yourself. I was just there. I can promise you, I saw with my very own eyes that there is almost a zero compliance in the areas where I was. And go to another place like Tucson. I haven't been to California, but Tucson, there's 100% compliance, to an extreme. There's almost 100% compliance with people driving around in their car, for heaven's sakes. So how do you explain the fact that there's dramatic differences in actual behavior and what is safe and quote unquote unsafe, but yet the numbers are completely they're almost identical, but then there's no correlation, there's no rhyme or reason to it. Sometimes when they'll do a mask mandate, the numbers will improve, sometimes they won't. Sometimes they do a lockdown. There's no consistency to it whatsoever. And in science, that means that's because there's no causal effect.
Yeah.
Is there any way we can get into the Great Reset now and your view on precious metals?
Sure. Yeah, I had lunch Sunday in West Palm Beach with Jeff Snyder. And Jeff is kind of in that deflation, he wouldn't say deflation, he would say the disinflationary camp. And Jeff is the smartest guy I've ever met in my life. He's probably tied with Lynn Alden. They're right up there. I don't know any people that are smarter than they are. Not only that, but are better researched. They're literally like talking to a human encyclopedia. I mean, I go back 100 years, 200 years, 300 years on monetary policy in England, and they can just rattle off statistic after statistic. I mean, it's unbelievable. So Jeff has a very good argument for deflation. It'd probably take the whole interview for me to explain it. But then you ask him, you say, Jeff, do you own gold? Because someone that is a disinflationary mindset, let's say, they probably would own bonds, they'd own cash, they probably wouldn't own gold, which is usually seen as an inflationary hedge. But Jeff says, absolutely I do. You say, okay, well, why? This is because the monetary system, the global monetary system is broken. It's broken. And it hasn't been fixed. He's talking about the Eurodollar system. It broke during the GFC or prior to the GFC, or that's what caused the GFC, really. And it has never been fixed. It won't be fixed. And at some point in time, the house of cards has to just completely crash. And we need a new monetary system that will emerge from the ashes. He says, I own gold because that time when you go from point A to point B, it gets real ugly. And that's when you want to own gold. It's silver. But my point is that's kind of dovetails onto this Great Reset agenda that the World Economic Forum has been talking about for quite a few years. Actually, this is nothing new. And a lot of people, when I first started talking about the Great Reset agenda, a lot of people labeled me as a conspiracy theorist or a tinfoil hatter. But now it's much more mainstream on YouTube and social media. But these are their words. I'm not making up.
No doubt.
You go right to their website, and it's there in plain English. And they've got blog posts. They've got all of their strategies or the way they see the world forming. It's all right there on graphs, charts, these I don't know what they're called, these diagrams that they always do, those circle things, where they've got all these things stemming out from like some core. I don't know what that's called, but they're always doing these. And then Klaus Schwab, who's the head of the World Economic Forum, actually has done quite a few blog posts. And then if you just read a lot of their material and put the pieces of the puzzle together, you can pretty much see what their quote unquote agenda is and how they see the world. Now, how they're trying to get us from point A to point B is another topic of discussion. I think that they're using the propaganda techniques used by the Germans back in prior to World War II. Now, I'm not saying the word because we're trying to keep it YouTube friendly, I'm assuming, but you guys know what I'm talking about, which propaganda here. Now I'm not saying that the World Economic Forum or the IMF or the global elite is that group of people. I'm not saying that. All I'm saying is they are definitively using the same techniques as far as propaganda. And now whether they're doing that intentionally or unintentionally, I don't know. But most likely it's premeditated because it's kind of a specific process. So the process goes like this. First and foremost, you have to convince society at large to abandon critical thinking and rationale as their number one priority. That needs to be replaced by feeling. So why on earth are you guys worried about critical thinking and rationale? That at the end of the day, it really doesn't matter. What really matters is just how you feel. And that's what goes all the way back to Germany, 1930s. This is nothing new, but we see it really being promoted heavily over the last, call it 5 years, 10 years, something like that. And so that's number one. And then what you do is you have to get into the school system to start using this propaganda at a very young age. And then you have to start using the propaganda in media. And then you need a boogeyman. So we obviously know what the boogeyman was in 1930s in Germany. And then contrast that today. I don't know what their boogeyman is, so to speak, but you can definitely see what they're doing with the school system and how they're encouraging these ideas also in media. Now, a lot of, and Milton Friedman talked about this as well. If you've watched the couple episodes that he did with Donahue, I remember he referenced this specifically, where you've got two groups of people that are considered do-gooders. You've got the people in the front lines, and they're kind of the useful idiots, as Marx would say. And then you have the people behind the scenes kind of pulling the strings. And these are usually, he used the example of heads of corporations that really are just giving lip service to a certain social cause just because it benefits them, because it makes it easier to create a monopoly because of the government regulations. But I think that if you look at the World Economic Forum, and there's levels of these individuals on the front lines that Friedman said, or there's levels of useful idiots. Like Benioff as an example, Mark Benioff with Salesforce. I mean, he's like a Klaus mini-me. Every single thing you hear him say is not only right in line with the Great Reset agenda, but he even uses the same terminology, and he even demonizes the same people. If you look at the World Economic Forum, especially Klaus, the one person they always demonize is Milton Friedman. Always, always. And they always use the term neoliberalism as though it's this bad, evil thing. You know, whenever you touch neo to something, it just, for whatever reason, it conjures up a lot of negative emotions in people. And he knows that. So, but then if you actually look up what neoliberalism means, you're like, well, I like that. That sounds pretty good to me. It's basically free market capitalism. And then what they'll do is they're all socialists. They're all central planners. They believe, if you can just put two and two together, they believe that there's an intellectual elite in the world, which they're a part of, that really they get it. And all these, the rest of the 7 billion people on Earth are just too stupid to understand what they understand. They're just not enlightened. They're these dumb yokels and rubes out there that are just completely destroying the world and society and creating all these bad things because they're just too dumb to see the light. And therefore, we need to take all of the control and all of the power so the other 7 billion people don't ruin the world and don't ruin it for future generations because we're so smart. That's basically their underlying tone. Now, whether there's good intentions or bad intentions, I don't know. I mean, I'll leave that up to you guys to make your own decision. But it's all boils down to more control over the economy and society at large. So this parlays into what you guys were talking about with gold and silver, because one of their main thrusts is climate change. Now, again, I'm not going to debate that right here, but what they're trying to do to prevent climate change will completely destroy the economy from a standpoint of the creation of goods and services. And that's what people need to understand first and foremost, that the wealth in an economy has nothing to do with the amount of currency units. See, people confuse this. They think that if, as a society on an aggregate total, if we have more bank liabilities, which are just basically bank deposits, then somehow we're richer. That doesn't make any sense, right? It's about the goods and services. If you're stranded on a deserted island and all you have is a chest full of money, you're poor because there's no stuff for you to buy or consume or use. So we have to start thinking of wealth in terms of goods and services a society can produce efficiently, so they can produce more than they consume. But what happens with their initiatives, this will reduce the amount of goods and services. Now they say, oh, well, don't worry about it because we'll just print so much money and governments can take on deficit spending and governments can fill the gap. But again, it's a focus of wealth being on currency or currency units as opposed to goods and services. So if there's a decrease in the amount, a massive decrease in the amount of goods and services produced on aggregate total across the world, then that means that we are going to become poor. They're going to fill the gap. You guys know what the central banks are going to do. You guys know what the governments are going to do. Just look at the 2020 playbook, right? M2 money supply is going to go up by 25%. Who knows what it will go up this year or the next year. The central banks will monetize all the debt the governments are producing in order to, quote unquote, stimulate the economy. Well, this does a few things. Number one, it's great for Klaus and all of his buddies because of the Cantillon effect. They are closest to all the money printing. Therefore, they will benefit the most. They, meaning the political insiders and the financial insiders. And you can see this as plain as day with the $4 trillion stimulus package that Biden rolled out, what it was, a month ago or so. You know, only 300 billion or so, I don't know the numbers right off the top of my head, but it was a very low percentage, actually went to people, the average Joe and Jane.
What?
Yeah, people think that all 4 trillion went there. I mean, that's
no way. Yeah.
Only maybe 200 billion. All the other trillions of dollars are just these, you know, going to XYZ corporation and this insider's buddy and that, and, you know, they're saying, oh, well, we're going to build railroads and they're going to, you know, give you a donation every single year for $1 million. It's just complete, it's craziness. So this is this Cantillon effect, which benefits these people that go to Davos. These are the global elite that I'm referring to. And by the way, that's put on by the World Economic Forum. So they're benefiting as a result. But when you have, this is a simple math equation. When you have the amount of currency units in the world going up significantly, and you have the amount of goods and services going down, you don't have to be a rocket science to figure out that means consumer price inflation. Mm-hmm. Now, we can have asset deflation at the same time. If you look at the 1970s, from 72 to 74, the stock market went down in nominal terms by 50%. And that was during a period of high consumer price inflation. A lot of people always say, oh, well, stocks are a great hedge against inflation. Yeah, maybe. Yeah. It depends on how bad the inflation is. If the inflation is hyperinflation, then yeah, you're going to have Gresham's law kick in. But if the inflation is 1970s, maybe not, especially when stocks are all-time highs. When you look at valuation metrics, such as the Buffett indicator, market cap to GDP, or you look at the CAPE ratio, you know, it's by no means cheap. So you got a long way to go. I think they could easily come down in nominal terms. Who knows? They may come down just in real terms. But the point is, whether you're an inflationist or a disinflationist, or a deflationist, you've got to look at what's coming down the pipeline, whether it's the collapse of the monetary system, or whether it's a collapse due to these this crazy agenda that they're trying to push through, destroying the supply chains, destroying free market capitalism, reducing the supply while they're increasing the currency units. That in any of those scenarios, you want to have a certain percentage of your portfolio in precious metals.